Ladies and gentlemen, the breakdown that we have been expecting on a local time frame for the last 3 consecutive videos from this ascending wedge structure has occurred. It's occurred quite viciously, and unfortunately, the $113,000 support zone did not hold. We are now still at this point in a free fall on Bitcoin. I look at the short-term charts, I don't see any real reason at this point to claim that the bottom is in. What I can see is support coming from various other charts, not from the Bitcoin chart. Charts like the total cryptocurrency market cap chart and charts like Ethereum, which is now testing a critical support region. So there's some nuance to be had here in regards to this correction. We need to discuss it today, and we need to discuss the unfortunately weakening macro scenario that we find ourselves in. I'm still macro bullish. I think we're still in a macro bull market. I hold that opinion strongly, because we simply have not seen the breakdown validation necessary. But to act as though the charts look very strong here, I think also is a bit of a stretch. The fact is, and remains, as it's always remained, we need to get above $118,000 as soon as possible. And secondly, we cannot afford to get below $107,000. Those two facts remain and will remain until one of them is validated and one of them is broken. So let's discuss the situation here today. While remaining macro bullish, we need to also understand the short-term nuance. Guys, let's get into it. Before we do so, check out the Bitunix Exchange. There's a reason I talk about it on this YouTube channel. That's because it's global, it's non-KYC, it's never been hacked before, right? No VPN restriction. It's very rare to find an exchange these days, let alone a popular exchange with all of these features and many, many more. So if you want to sign up to this exchange, use my referral link down below and you'll get a 15% lifetime exclusive discount on every single buy and sell you make. 15% off of trading fees with that link down below. Help out the channel and help out yourself by getting on a solid exchange. Use that link. Appreciate it, guys. Let's get into the content. No point beating around the bush, quite simply. And unsurprisingly, Bitcoin has rejected from its ascending wedge. It's broken down from that ascending wedge. It's seen validation via momentum indicator on the hourly chart RSI, and it's plummeted. Okay, that ascending wedge was not just anywhere. It was testing actually a very important yellow line. A yellow line on the screen. It's just yellow on this chart. It's not yellow in reality, but it's a very important line going right backwards to 2017. Look at this line here in yellow. See how it cuts across the 2021 all-time highs. See how it cuts across late last year and even up until this very point. On the last 2 occasions we've touched it, there have been rejections. So we've seen a second rejection from that line now. Very unfortunate circumstance there. Rejecting from the downside from this line twice does actually raise eyebrows a little bit. Again, no downside validation yet. We're still above where we need to be above, and we'll discuss that a bit more in a moment. But the fact of the matter is, it's absolutely imperative that Bitcoin sees a higher low here. We don't want to go below 107. We do have some preliminary support coming through via this blue line on the screen here. That's the 100 exponential moving average. And that 100 exponential moving average has been a dividing line in the sand between bullish and bearish phases of the last year or so. In fact, even a year and a half. It's good to see that being retested as support. It's good to see that holding for now. But really the indicator that matters in my view is actually the bull market support band. There's a very specific reason I say that. The bull market support band is not just an indicator of support and resistance. It's actually part of a larger cyclical trend, right? Every single September in which we have seen a Bitcoin bull market, we have retested the bull market support band during that month before bouncing to all-time highs. We've retested the bull market support band in September on top of an established neckline of support before bouncing to all-time highs. Now, we retested that bull market support band in September. Just to show you some examples of when this has happened historically, we look at 2021. There's that neckline, there's that retest in September, there's the all-time high. Same exact thing back here in 2017. I keep bringing this up because it remains important. Neckline, retest in September, all-time high. Given the fact that we now have 3 data points of this occurring, in 3 exactly the same part of the cycle, not just cycle itself, but exactly the same part of its cycle being September, the month of September. This is a clear mathematical trend, and therefore, unless Bitcoin breaks down from this bull market support band, I will remain bullish. But the key is, we need to hold that. And we can't just be seeing a fake out below it, we need to actually break down below it in order for a bearish trend to be identified. And that's the reason why I'm still sticking to $107,000 as the invalidation zone for my bullishness. What I see on the Bitcoin charts right now is weakness. Weakness from the fact that we've rejected from the same level twice. Weakness from a short-term breakdown. But that weakness is yet to be validated with the necessary macro breakers. And so I do remain macro bullish, but I am getting progressively more cautious as we get lower and lower here. I really want to see Bitcoin have a sign of life. Now, luckily, Bitcoin is not just in a free fall, okay? Luckily, there are levels that matter across all kind of charts here. One of them is the Ethereum chart. Ethereum's critical level, which is kind of the equivalent of Bitcoin's $107,000 region, is clearly identified in this green box between 3,900 and 4,100. And Ethereum also had a big breakdown today, and that breakdown took us right to that critical level. So we are on support right now for Ethereum. We are also on support right now for the total cryptocurrency market cap, which has actually been testing a support zone. It's been holding since April. The third retest of that support zone, validating it as a critical uptrending major support line. We retested that zone during this correction, and we seem to be holding it for now, so that's a good sign as well. And even the total 3, which is the altcoin market cap chart, seems to be holding on to a support zone as well. Unfortunately, that support zone is within a bearish structure, an ascending channel formation. Furthermore, an ascending channel formation testing the major 2021 resistance zone as well as December 2024 resistance. So it's not exactly the best place or structure to be finding support within. It does contribute to my concern about the chart here, which is growing, but nevertheless, it is still support until broken down below. Now, I'm going to get into this short-term analysis a bit more in depth in tomorrow's video, but I want to take a moment here to have some discussion about the macro because I want to give the charts in the short-term time to develop before I do so. At the moment, this breakdown is still very fresh. It's actually currently still happening, so I don't think it's necessarily the time to be talking about reversals or anything like that. We need the chart to mature a little bit. One of my reasons that the concern is growing here, and this is a reason I discussed yesterday before this breakdown even occurred, is because it looks like the S&P 500 is having some sort of potential blow off top. And if we do see the S&P 500 start to round out, that would line up with what's generally happened during the end of bull markets, where the S&P 500 tops out about a month or two after Bitcoin. Assuming the top on Bitcoin was in mid-August, that would line up with an S&P 500 top starting around now, which makes me a little bit uncomfortable that we seem to be ramping up the move to the upside in what looks like it could be some sort of blow off top around the interest rate cut decision. So again, caution is growing. But the reason I retain my bullishness, as I mentioned, is one, we haven't seen the macro validations, and two, it does still seem that the 4-year cycle is still happening, it's still intact, and an ideal 4-year cycle top would come in October. A 4-year cycle top that is most supported by the data we currently have would come in or around October. There is an argument to be made, you probably heard of it, by something called the 2-bar theory, that there could have potentially been a top in August by the 4-year cycle. I think that's a weak argument. Not impossible, but weak. It's weak because it's based on 2 data points. 2 data points of shortening, and simply put, 2 data points is not an established trend. It will only be an established trend if it plays out this time, and then we can use the 2-bar theory in the next cycle. Currently, it's an invalid trend, or an unvalidated, probably is a better word, trend. So currently I'm still trusting the cycle until we see that macro breakdown. I've discussed charts like this logarithmic regression channel in the past quite a lot, in which the angle of ascension between top and bottom halves each cycle. You can see where I'm circling right now. You can see that the angle is halving each cycle between macro tops and macro bottoms. And in October, that would bring us to around $130,000. That's supported by the logarithmic regression channel, again, on the power law chart this time, which would bring us to around $135,000 in October, and further supported by this line from 2017, which, if drawn from tops properly, would bring us to $130,000 in October as well. So all 3 of these charts are going to be influential in determining basically where resistance will be. But the issue with these charts, and the reason why I'm not using them as an argument for an October top, I'm rather reacting to them if they do come up in October, is that they've already been retested. They've already been rejected from in August, right? Rejected from here on this 7-year line, rejected from here as well, and rejected from here as well in August. So all 3 of these charts have already been tested and rejected from. The question is, do we go up and test them again? And that's where $118,000 comes in massively. If Bitcoin breaks above $118,000, not only does that give Bitcoin the momentum to dramatically move to the upside and validate the bull market support band bounce theory, but it also gives Ethereum the momentum to break its 2021 all-time high, as well as the total cryptocurrency market cap the total 3 to break its 2021 all-time high as well. Let's get that up on the screen just so you can see it. The altcoin market cap is sitting at its 2021 all-time high, just like Ethereum. So if Bitcoin breaks 118,000, we see a breakout across the broader market. And that's when these big levels, 130K, start to really matter. Right now, they're not really on the table. And that's why I've advocated quite heavily for holding off until that $118,000 level is broken definitively. Right now, the way I see the charts is incredibly simple. If we are above 107, and specifically the bull market support band, things still look okay because we're still holding on to the macro upwards trend and we're still in a consolidation, a neutral consolidation, rather than an active breakdown. But we do need to move upwards, and if we don't move upwards, this gets more and more worrying by the day, especially as we start to test these levels. Nothing that's happened in the last 24 hours is unexpected. We expected this short-term breakdown and we expected to be in this position. The concern is now growing because now that we are in this position in which we are moving down on a local level and coming towards these very critical levels, the importance of these critical levels is highlighted and at the front of our minds. We need to hold them and we need to bounce, simply put. I'll update you on the situation tomorrow. Guys, thank you for watching. I really hope you enjoyed the video. Leave a like, comment, and subscribe. Obviously, subscribe to see that content when it comes out tomorrow and the day after that and the day after that until whenever I decide to stop posting, which hopefully won't be for years. As we mentioned at the start of the video, check out that Bitunix Exchange. If you need a good place to trade, and the keyword there is good, because there's lots of places you can trade, but a lot of them are not good. A lot of them are very unsafe. A lot of them cannot be accessed by many regions in the world. Bitunix, in my view, is the solution. I use it personally. It's globally accessible, no restrictions whatsoever. It's never been hacked before, and it's got everything you would expect on a major exchange. With my referral link down below, you can get a 15% trading fee discount attached to your account for life. Exceptionally good stuff there with that link down below. Help out the channel and help out yourself. Appreciate it, guys. Thank you for watching. I'll catch you soon.